We're live?
Yep.
We're live, I guess. Hey, welcome to the Wealth-Standing Podcast. This is episode 521. Today is May 20th, 2026. I'm your host, John Pugliano. I'm also the founder and money manager at investablewealth.com. Today I have my co-pilot with me, Joe, and we're going to talk about Intel and the deep state and the changes in national security that are driving moves in the stock market. We'll talk about all that and more. I guess before we get to it, we'll check. I'm going to ask Joe about microphone check. Just so far, we sound okay. Whenever we've done YouTube live, and I guess, I don't know, did I say we're live on YouTube? We are today. Whenever we do these episodes, we've had technical problems. We thought it was the mic originally, and we thought it was solved. And then last week when we did it, we found out it was actually an audio adjust gain. There's something about my voice and my Pittsburgh accent that I don't know, Windows 11 doesn't like. And so we think we have all the auto adjust settings disabled and properly set, but I don't know. We'll find out. Obviously, you guys in the chat room can tell us if we don't sound right, and Joe is actively monitoring it at the same time. So if there's any problem with audio, blame it on Joe. Hey, Joe, speaking of you, what are you seeing in the markets this week, or what's caught your attention?
You asking that just changed them.
Actually, that question alone, my voice didn't inflect that much though, did it?
I don't know.
Okay, you're watching sausage being made behind the scenes and how things really affect it. I'm going to try and talk very monotone so I don't mess up the microphone. What are you seeing in the markets, Joe?
Yeah, so one observation I've been making with all the AI stuff, right? And everyone's cutting their workforce to save money. And part of that, as well as some of them are going fully remote. So during the pandemic, when everyone was going fully remote, staying at home, they were freaking out about commercial real estate going down. And I haven't heard that this time around. But I mean, there's been a lot of companies lately that have cut thousands of jobs, and then in addition to that, gone fully remote to save money, to make the bottom line better.
Yeah, but we're not hearing about commercial real estate being a problem. And so, yeah, keep that on your radar. That's a possibility. I agree with you. I think that's something you should watch. We personally don't invest in any, or currently are not invested in any real estate or REITs, other than the only thing I can think of is we do own American Tower, which is the company. It's a real estate investment trust that owns, as the name states, the towers and things that cell phone towers and different communication towers are on, that type of real estate. That's all we're currently in. And I have not liked commercial real estate, whether it be big box stores, retail stores, or office space. I haven't liked that since the pandemic. And there's nothing out there that would make me want to like it anytime soon that I can think of. I do, however, I still like the logistics type real estate, any of those kind of REITs. And I especially like industrial sites. I'm not personally invested directly in any of the data centers. I know there's a lot of private equity money and things like that in that, but I like overall just industrial sites. There's been, I don't know, the spending on industrial sites, not even counting data centers, but actually onshoring of expanding or building new greenfield industrial sites since the pandemic. We're over $200 billion a year in investing in that. And prior to the pandemic, for 20 years, we were at like maybe spending 50 to 60 billion. Now we're regularly spending 200 billion. And I think in 2024, it was something like 250 billion spent on just industrial manufacturing sites. If I was going to invest in real estate, that's where I'd want to be. Yeah, kind of a joke. Everybody was worried a few years ago that Bill Gates was buying up all the farmland. And I think the joke on that is he probably was, but he wasn't buying it to farm. He was buying it for data centers, right? We're saying Mr. Wonderful here in Utah is fighting a battle with some of the local people and farmers about putting in a data center just north of where we live.
Yeah.
So who knows? Hey, as far as Intel, will any of you in the chat room, if you want to put in questions, we'll try and get to those in this episode as well. But what I wanted to key in is uh, Intel stock specifically, and just frame this in how the overall era has changed in terms of national security and how that's impacting the stock market. It's why I invest in what I do now with my whole focus for the last, I don't know, 4 more years about the industrial tech sector. It's not just all about technology or all about software. It's it's about moving carbon as well, and that gets into the industrial side of it. It's the reshoring or nearshoring or friendship shoring of supply chains, and this is all a drastic shift from what we've seen for the last 30 years. And again, it's not new. It's something that I talked about in my book. It was less about national defense when I talked about it in my book. It was written some 10 years ago. Um, then it was more framed on energy independence. But the same thing plays out. And the reason that we are now energy independent is because that was part of the national security shift. But I think that the thing that a lot of people miss is they let their ideology or their political leanings affect how or what they invest in. And what I try and do is be agnostic. Hey, I have my beliefs, I have my biases, I have my prejudices, but what I try and do from an investing standpoint is just try and make money. When I buy or sell a stock, whether I believe in the mission of the company or whether it's good or bad for society or humanity, or it conflicts with my personal beliefs, is irrelevant to me. I want to invest in legal things that are traded on the stock market because when they go up in value, I make money and I can then consequently use that to make my lifestyle better and I can choose to make good decisions with it. If I choose not to buy a stock because they're defense related or because they're part of the deep state or whatever reason, well then I'm not going to drive the price of that stock one way or the other, and I'm just not making money for myself, or in my case, as a professional, I'm not making money for my clients. And as a fiduciary, my clients hire me not to make moral decisions; they hire me to make money. One of the things I think a lot of people miss is Intel. Over the last, Joe, do you have the performance of Intel,
Yep.
Andy? But what's Intel done? I know it's probably down over the last week or so, although it did bounce today. We have earnings come out for Nvidia, and so that may that's I think affecting a lot of the market right now. But what's Intel done over the last month?
Last month, Intel is up 75%.
75% in a month. I think most of that was driven because Apple has now committed to just a small amount of using or buying chips from an Intel domestic uh, foundry, actually making the chips here in the United States. And I think even if those commitments come through, it would be far less than 10% of Apple's overall chips that they're going to buy. But that announcement alone has driven Apple up that much just in the last month. But beyond that, what is it year to date?
Year to date, it is up 212%.
Year to date, it's up that much? Wow. 212% year to date. So what's it up over the 6 months?
6 months up 243%.
200, because I guess we're almost 6 months into the year. 243% in the last 6 months. And then over the year, it's got to be up 400% then. How much over the year? Over the last 12 months,
Yeah,
not
over
this year.
over the last 12 months, it's up 442%.
442%. But if you zoom out to the last 5 years, I'm sure it's probably not up anywhere near that. What, 100% or something?
Yep, 106%.
106%. So if you own Intel stock 5 years ago, or really over the last 15 years, you probably have made very limited returns and probably even lost money in a lot of cases. But if you've owned it over the last um, year, you've done extremely well. And I mean, how many of you knew that, right? How many of you knew that Intel was up? I mean, what's the number? The last 12 months? 400.
Last 12 months, 442%.
442%. I bet you didn't know that, right? And you're not seeing that talked about in the media much. Why is that? Well, it's just because it is real organic growth, and a lot of it is occurring, in my opinion, because of national security. Um, for the thumbnail for this episode, we kind of played on the old Intel Inside logo, and I I said, Intel inside the deep state. Really, it should be the deep state inside Intel. This is all about national security. Intel has been one of the worst, if not the worst, American managed companies in the last 25 years, last 30 years. Why is their stock growing exponentially now? It's because we need them for national security. And the government, and this is just, again, put your ideology aside. This is not just orange tariff tax bombing Trump man, right? This is, uh, it started with, well, I wouldn't say it started, it was definitely occurred though under Biden. They did the CHIPS Act under the last administration. So this is where you've probably seen the meme that no matter who you vote for, you get John McCain. And the joke of that meme is that you're always going to get the deep state candidate, whether it's a Republican or a Democrat or conservative or liberal or whatever. There's always endless wars. There's always investment, and some people think needless investment in security, in national defense, and in things like foreign aid. But it all comes down to national defense. That's what the deep state does, and the deep state deeps, right? The deep state. And they're going to keep doing that. Again, you can disagree with that. You may not like what the US and Israel is doing in Iran. You may or may not like how we are or aren't supporting NATO. You may not like what's going on with, um, again, support or not supporting the Russian invasion of Ukraine. You may agree or disagree with US policy on Taiwan. You know what? It doesn't matter what you think. What matters is where the money's flowing, and the money is flowing uh, to build and reestablish domestic manufacturing and to hold superiority in certain technical areas. And that's going to continue. And again, this is a major shift that we've seen because well, let me step back a second too. We hear a lot as we talk to people, Joe and I, that, well, again, this is just something that's happening now. Well, it's always this way. If you go back and listen to one of my old episodes that I did on Veterans Day about Smedley Butler, the highly decorated Marine Corps general, Smedley Butler, he wrote a book, I think it was in 1934, called War is a Racket. And he lays out everything. 1934, for those of you who don't know your history, that was before World War II even started. So his criticism was what was happening um, before and after World War One, and how he was basically calling out the what President Eisenhower called the military-industrial complex. Smedley Butler was calling that out in the 1930s. It was around then. It's around now. It's always going to be around. Study Roman history, Greek history. It's just the state of mankind. The state does what it does, and its main objective is to uh, keep its dominance, and it's going to get involved in different industries. And as investors, we want to follow those trends. Following the collapse of the Soviet Union in 1991, we had more of a global perspective because that's what benefited the United States at that time. And I think we carried that too far. That was something that should have run maybe 20 years. It ended up, running over 30, 35 years. And because of that, we now have to overcorrect and bring industries back. And the government's going to make investments in Intel. And we've seen them do things in MP materials or rare earth magnets. They're investing in Intel refineries. The government is just going to keep taking a piece of these businesses and or creating policies or regulations or deregulations that favor these. We're seeing it in pharmaceuticals. It's happening across the board in low and high tech manufacturing applications. My advice to people is take advantage of it. Intel's a classic example. I think, let's check my notes here. Just over since the Biden administration, we saw the CHIPS Act that was $11 billion. I think my voice just did something, Joe, that screwed up the mic again.
Yeah.
$11 billion was from the CHIPS Act. That was the initial thing to really keep Intel from going out of business because, again, they've been the most mismanaged company in America for a long time. That's been shored up with other Pentagon contracts of guaranteeing like 3 or 4 billion in foundry chips to be made here in the United States, specifically for defense purposes. Under the new Trump administration, they've gone in and taken um, more or less a 10% stake directly in the company as almost part of a sovereign wealth fund. And just recently, again, we talked about why Apple bounced so much in the last month. Apple is now committing to buying US made Intel chips. This is going to continue. And we've not only seen it um, with Apple, but over the years, I've talked about Boeing. I used to call Boeing one of the deepest of the deep state stocks as well. Joe, do you remember that blog post was? It was like 2020. I think it's February. Joe's going to pull something up here. I think it was February of 2020. So just prior to us going deep into the pandemic, I mentioned something about everybody was worried about Boeing stock going bankrupt. And this, again, was before we even got into the depths of the pandemic. But what did I give some key points about Boeing?
Yeah, so you said the US's largest manufacturer.
Okay, yeah, and I haven't checked this recently, so I don't know if Boeing is still the US's largest manufacturer. I think they are, and it's just because of sheer numbers, right? When you buy a Boeing jet, it's, as as they say in science, billions and billions of dollars, right? So it's not necessarily in volume, but in dollars worth, they are, or at least were, the U.S.'s largest manufacturer. And there's no way the U.S., not even just from national security standpoint, but from economic standpoint, they are not going to let their largest manufacturer go out of business.
U.S. largest exporter.
U.S. largest exporter. Okay, so not only the largest manufacturer, but again, exporter. And for all the people that are worried about petrodollars and all those kind of things, you know what? If you're going to buy the U.S.'s largest export, you're going to pay for it in U.S. dollars.
Primary beneficiary of the U.S. Import-Export Bank.
Yes, the U.S. Import Export Bank. And this, I think, has been set up since basically Bretton Woods agreements in like 1946. But that has evolved to the point where, again, recently it probably has changed because of the CHIPS Act and things. But back in 2020, when I wrote that post, the vast majority of money for decades that was guaranteed loans from the Import Export Bank was to buy Boeing jets and Boeing defense equipment. So that's not changing. What else?
Tariffs on Airbus have been raised to 15%.
Yes, tariffs, right? Think all the way back to 2020. Tariffs are in the headlines now, but Trump had imposed them in his first term, and we had always had some type of tariffs anyways on aircraft, and specifically in this case, the number one competitor to Boeing is our allies in Europe with Airbus. And I don't know where tariffs are now, but back in 2020, they were still 15% back then, favoring specifically Boeing.
And then the last one you said was a pending ban on sales of GE aircraft engines for China's new passenger jet.
Yes. And again, back even then when relations with China were better than they are today, we were still banning certain non-military exports going into China. We've seen that on steroids, again, not only just with this Trump administration now, but it occurred under the Biden administration too, where we look at certain high-tech sectors and we say, we are not going to sell those to either adversaries or competitive nations that we don't want to get ahead of us. It's a deep state plan. It favors economics in certain U.S. companies, and I think you should position your portfolio to take advantage of that. And don't forget, economic security is national security. I think we did get away with thinking of that at some point, or at least the media coverage has. But a key point of national defense has always been a strong U.S. economy. So Intel, Boeing, both major deep state type companies. Let me see on any notes here. There's another deep state company we can talk about, I guess, but questions, Joe? Has any questions come up?
Yeah. So we talk about your book a lot. Is there going to be a refresh for 2026 or?
No, yeah. So I wrote the book in 2016, so it was a decade old from the writing. It didn't get published until 2027. So next year will be the 10-year anniversary. Um, no, I'm not going to do a refresh. We will probably quote from it and see where I was right and where I was wrong. We'll do that in podcast episodes. Um, I have laid my hands on some original first edition copies, which, by the way, are best sellers in Brazil. So you know. Um, and we'll probably do some giveaways or something like that next year just to celebrate that. Mine and kind of getting along with today's theme. If I ever write another book or the next book I write, it will probably be called something like "Investing with the Illuminati," right? And that goes along with the deep state. We have the little seeing eye in the thumbnail for today's episode. You know, um, the deep state is going to keep deeping, right? And why should the Illuminati make all the money? So, if anything, I would probably write a book along those lines.
Okay. Nvidia reports earnings today. Are they going to disappoint?
Yeah, this will be interesting. The media has hyped this up so much that there's a chance if you see a headline that says that Nvidia disappointed, I would almost bet that it's going to be just for hype, just to create controversy, because there's almost no way they can really disappoint. Their numbers look super solid, and even a disappointment would still be like billions, right, in earnings. So we've never seen anything like it. I had owned uh, Nvidia's in the book. If you look at the robots are coming in the back of it, you'll see a reference to Nvidia. So again, this is not a new company. It's been around forever. Back in those days, it was about gaming and about self-driving autonomous vehicles. I think in the book I mentioned that it was one of those steps of taking it from gaming and putting it into what then was called virtual reality, or being able to have the
Like,
Google glasses
yeah, the
and
VR.
yeah, virtual reality type stuff that we're still really waiting for. But Nvidia has always been a player, and I owned Nvidia sometime after the pandemic when it had really soared. I sold it and should have held it because in 2023, late 2022, probably early 2023, it really started to move, and I did not believe the numbers. When I saw the numbers in 2023, uh, I saw the trend and I said, you know what, this is it's got to be overblown. I don't believe it, and I was wrong, right? I mean, I waited about 6 months into it. I figured out, okay, this is a company that's growing. These numbers look real, and at that point, it had risen too high, and I was waiting for an entry point. So I don't think I really got into it until later in 2024. And really, what I did, and this is just a key point: if you miss a trend, right, don't have fear of missing out. Don't go through FOMO. Look for another entry point, either into that stock or into an ancillary part of the trade, or like a second or third derivative within the supply chain. And so if you remember in early 2024, the way I really jumped full bore into the AI trade was not by investing in AI stocks, but I took like a 25% overweighted position in the utility stocks. And I tried to invest specifically in utility stocks that looked like they would be in areas where there would be future data centers, and also utility stocks that had a high concentration of existing nuclear power. And that has, to this day, that has played out extremely well. I still own, originally then I think I bought about 15 stocks. I added a couple more. Then I took some profits last year to invest in other high tech industries. But I still think I own a good, at least 12, if not 15 utility stocks currently. It's been a fabulous trade. I think they've averaged, with dividends, probably, 18% type returns a year per year over the last couple of years. And this is from utility companies, things that are supposedly stable, just kind of widows and orphan stocks. And yet they've been a fabulous investment. And I still think they have a long way to run. So with NVIDIA, I guess I digress, Joe. You didn't stop me. with Nvidia, I would find it hard to believe there's going to be negative news. If there is, it may just be media hype. But look and see how it does play out. The other thing I would say, if any negative news is probably going to be because of back orders, right? They're so back ordered that they can't grow maybe at the rates they thought they would have. And while the media may spin that as a negative, I would actually spin that as a positive. And this is why I don't think we are yet in an AI bubble. We may hit an AI bubble. I do think things like Anthropic and OpenAI are maybe in a bubble, but for the actual application of AI technology among the big hyperscalers and among the actual nuts and bolts of the economy, I don't think we're anywhere near um, the dot com bubble levels. And the reason I say that is because we are constrained by physics, right? It the prices would go up even higher if we had the build out, and we don't, right? We can't get the memory chips, we can't get the land, we don't have the water resources, we can't generate enough electricity, we can't build nuclear power plants fast enough. So AI growth is being constrained by actual physical limitations, not by people running out of money to invest in it. And so for now, I think it's continuing. And the other thing that is hyped in the media is the whole large language model and that part of AI. I think where the real growth is going to be, and this plays into national security, these national security trends last 20, 30 years, right? We go from the from winning World War II to the Marshall Plan and a strategy where we build up our allied countries by giving them a share of our economy. That's something that carried us well into the 70s, and then we tapered back a little bit on that, but we still continued to really at that point move into um, bringing in more fossil fuels and things from the Middle East. That was a national defense strategy. That all shifted once we got into the 2000s. The shale oil revolution took place. We started investing heavily in domestic production of fossil fuels. Again, that was a national security reason that today the U.S. could go in and attack Iran. Right? We couldn't have attacked Iran 30 years ago because we needed the oil from the Straits of Hormuz back then. Today we don't. China needs it. India needs it. Most of the Eastern nations need it, but the United States doesn't. And so these trends last a long time. Where I think the real automation trend or the real AI trend is headed over the next decades is not so much just in the data side for large language models, but it's in building out United States robotics and automation of our factories. Right, we're going to have dark factories. It isn't making America great again by bringing back jobs. It's making America great again by having us manufacture more products, but those products are going to be made mostly by robotics and automation. Again, the point of the book that I wrote a decade ago, and it's not just the U.S. Joe, do you know the nation that has um, the largest functioning automation in the world, the most amount of robots currently in use? You know,
I think it's China.
China, right? China, and the part of that is that that's a country that still has 1 billion people living in poverty that need labor jobs, and they're replacing those people with automation. So it's happening in China, it's happening in the US. This is a multi-decade trend, and that's really where all these chips and all the memory and all this stuff is ultimately headed. These data centers, or the need to collect the data, are not just so you can do searches and cat videos. It's to power our factories and our roads. We will be at a point someday in the future when long haul trucking and trains and those type things, it'll all be done through automation. There's no reason to have physical truck drivers doing interstate drives for 500 miles at a time. We can do that with autonomous vehicles, but you need big data centers to make that happen.
Okay, and then you kind of teased this earlier, but what is the best deep state national security or national defensive stock.
Yeah. So if I was going to look at the company in America that is most hardwired to the Pentagon, you may think it's Raytheon or one of these defense type companies that are categorized as a defense company, or even a Boeing, right? Boeing is commercial airlines, but they're still heavily involved in NASA and uh, military things. Or you may be pointing to some of the new startup companies that are doing drones, because we are going more to drones and autonomous warfare as well. But if I was going to pick the best company to invest in that's key to our national defense, it would be, Joe, do you know who I'd say?
Alphabet.
Alphabet, Google, absolutely. And if you don't believe me, I guess we'll end on this note. If you don't believe me, go look at who their former CEO was, Eric Schmidt. Go Google Eric Schmidt and see where he is, where he's come from, what he did before and after Google. And the deep state is heavily deeped in Alphabet. Well, hey, I guess that wraps it up for today. Good seeing you guys. As always, until next time, best returns.